All right, you guys, another crazy week this week. I'm recapping the April 20 to 24 week, and looks like we started the week off right about here around 282, and we ended the week uh, relatively flat, about 283. So nobody made money here if you're going long or short. If you are a swing trader, it's pretty much a flat week. So on Monday we did have it opened up pretty flat. It was a big, huge intraday reversal. Like we opened up, lower, went up, came back down right to the open, and then momentum, like I talked about a couple weeks ago, momentum trading. If it looks like it's falling, you short it down here into weakness, and then here you cover and take your profit. So that would have been a nice gain if you are a momentum trader and you shorted at the close on Monday and then took profits on Tuesday, and then the rest of the week pretty flat, pretty flat. Um, so here on Thursday was a pretty exciting day. Um, so on Thursday, the market looked like. Hold on, let me see here if I can. The market looked like this, where it was just humming along, looked like it was in an uptrend, and all of a sudden, pow, it dropped pretty huge. It dropped, geez, what is this? 4 points. Dropped 4 points in a matter of 10 minutes. That's a pretty huge move. Usually you don't see that kind of move. You see that kind of move maybe like over the course of a couple days, but not in 10 minutes. And this was news that Gilead's drug remdesivir wasn't working, and it was actually killing people. So Gilead's drug was the drug that a lot of people had hopes that it would be the vaccine that would cure coronavirus, and that's the reason why the market rallied last week. It rallied into the close. It was this right here. This was the remdesivir hope, the Gilead, that right there, and then it just faded off because the hype died off, and then that's pretty much it. So pretty flat. This market, it's actually a bullish sign. Here you have the 240 lows bumping around here after the end of the month, rebalancing. We held the 246 retracement on the Fibonacci, and we're uptrending, still in an uptrend. See this line here? That's the uptrend line. It did break below, but it's still relatively flat. Um, Being flat is actually bullish, okay? Because that means the buyers and sellers, the sellers can't take control. They can't bring it down past 270, 278. They can't bring it down to 264. If it got down to 264, this would be a reversal. It would be bearish, and we could see more downside. But since we closed above this 50% retracement, it's actually pretty bullish for next week. We could hit the 293 resistance, and then back up to all-time highs at 313. It's not very far away from that, but we are hovering around the 50% retracement. So right now it's bullish if it breaks above 290, and it's bearish if it breaks below 270. So that's the parameters for next week. I wouldn't be trading anything next week. There are some notable plays that happened this week, and one was what was it? One that I traded was Snapchat earnings winner. Let's take a look at the chart. Okay, so Snapchat earnings winner, it looked like this when I took the trade. Is it the classic ABCD pattern? You have the huge run up, you have the sell off for profit taking, then you have the bounce, and then you have a higher low. So here's your low, here's your higher low, and here's the highs. So I took the trade here at about 1484, and what happened was going into the next day on Wednesday, it popped like it's supposed to, and it kept going. So this one was actually a huge win. This was about a $400 gain. So I only traded 200 shares, but so what you do when you enter a perfect trade like that, you want to lock in your gains. So when it got up to here, I decided to lock in my gains at $16 a share. So I said if it drops $1, then I'm getting out, because it could continue to fall, and then it could go back to where I bought it and I make zero. So it could go from positive 400 to negative or nothing. Um, so that's how you're supposed to trade. You lock in your gains, and then you don't look at it anymore. So I locked it in at 600. I put a stop limit order here at 16. Um, and if it ever got to 16, it would automatically sell. So since it didn't turn around, the strength died off. It hit 16 in after hours, and I got out. So now it's just kind of hovering around high 15s, low 16s. So maybe next week this could again, fade off some more. We don't know, or it could float back up. So if it ever gets to 17, I might actually rebuy this thing, because that's a sign that it's bullish. Again, the ABCD pattern works intraday, and it also works daily and monthly. So here, this would be the huge run up, this could be the sell off, and then when it floats back up to 17, you buy it for the breakout to 20. Let's take a look. There's other patterns. Let me show you this one. T-Doc. I'm not trading this. I haven't traded this one at all. Just kind of looking at it. But it is on my radar. T-Doc. Let's see. That's not a good example. So last week I said if a stock breaks its all-time high, it's a buy. There's some nice patterns going on here. Let me find you guys one. This one, is actually coming back. This was the one that had a vaccine, and they're doing human trials. This is actually the classic pump and dump chart. This is one where you have the huge run up. It went from 4 to 19, crash down, and then usually these things just taper off and then go back to nothing. But this one's actually finding more life because they started human trials again this month. But I'm not trading that. I know some of you are in it. Let's see, what else am I trading? Anyway, ZM was a good one today. Huge run up. This thing just hovers around $80 a share ever since the work from home and schools starting to use this software. It's been trading above 100. It hit a highs of 164, came back down because of security issues, down to like 108s. I didn't touch it because I don't buy hype. I don't buy hype because I know exactly what happens. It's this right here. This happens when you buy hype, because it's all speculative money. This is all people hoping to make a quick buck, hoping to squeeze people. So here, these are all people shorting, right? It didn't crash below, and then they had news that they were hiring people from Facebook, whatever, blah blah blah. They announced that their user numbers jumped from like 10 million to 300 million, which is huge. But those 300 million people aren't paying a dime. So the valuation here is just way too high. And this is all speculation money. This is people getting squeezed. This is people reshorting here. Another, like right here, you can see it. Right here, this huge drop is people shorting it. And then it's floating back up. And then when it reaches the top here, what happens? Boom, automatically sell because they got to get out. See, short reaches the top of this line right here. That's people covering because this is their limit. They're covering, and then the momentum takes it forward. Again, as a momentum trader, you buy on strength. You buy in strength, you sell it here. Let's go to the 5-minute chart. So you buy it here at 169 into strength, and then in the morning you sell it here for a $10 gain, $10 per share gain. See that? And then here, this was an announcement that Facebook released or is planning to release their own version of the Zoom meetings, because they have their own technology and billions of people use Facebook. So what does that mean for Zoom? They're going to take away market share from Zoom. So Zoom is no longer worth $181 a share on relative no income because it's free. So Facebook's taking all that business away from them, and this thing is gonna crater. It cratered already, but it's going to continue to crater. Let's see, until next week. 108. Let's go back 30 days. 30 days, we're at $100 a share. Let's keep going. 6 months. Here we go. It could potentially get down to $100 a share before people start covering and buying and rebuying for another huge run back up. But yeah, this thing, $61 at the lows. Let's see, let's go back 3 years. Okay, let's go back. How long has this thing been around for? Let's go back 10 years. Okay, it's only been around for that long. 2 years. Only been around since 2019, so we don't need to go back that far. Anyway, so yeah, this thing, $60 a share is where it needs to be because they don't make any money right now. So I'll give them the benefit of the doubt. This thing highest is $100 a share. This is not valued at $150 right now where it's at. This is going to come down. This is so this is the huge run up, sell off. This is a break above the high. This is a failed breakout. When you have a failed breakout like this thing is going to come crashing down. So I wouldn't be surprised to see this at $100 a share by the end of the month. Honestly, this thing is continuing to sell off. Let's see. Yeah, since this thing moved from 180 to so $25. $25 in a matter of an hour, 2 hours. So on Monday, you would expect this thing to drop another $30 on Monday. So this thing could crater all the way down to about 125. 125, and then the next day, it could like profit taking or whatever, chop around maybe 120, 130s, and then crater back down to 100. So this one, I wouldn't buy this. I wouldn't buy this going long. No way. Leave it for the gamblers. But this one I would stay away from unless you're shorting. Then go ahead and short this thing because this thing belongs underneath $100 a share. Let's see. Anything else I'm trading? Facebook. Let's take a look at Facebook. Facebook. This is the announcement of them competing with Zoom, releasing their own version. Yep, it's trending upward. It's going to do the opposite because they're taking market share away from Zoom, and this thing is going to continue to go higher. Let's take a look at Facebook. Where are they? No, still under where their highs are. 225 the highs. Here you'll have some resistance at around 202. So this has room to run. This has room to run up until 202, and then it'll start getting some resistance and coming back down a little bit, depending on what happens. So there's earnings coming up. Look at that. There's earnings. There's earnings coming up next week. So that could be another catalyst for more upside potential. Next week, I wouldn't touch stocks next week just because it's huge earnings week. A lot of the Dow companies are reporting. We don't know what their outlook is going to be based on the first quarter. So we don't know what the second quarter is going to look like. They may give negative outlook, and stocks will continue to fall, or they could have positive to neutral outlook because the economy might reopen, so things might go up. Okay, last week I talked about how the market is now desensitized by negative news. People, more cases of people getting coronavirus, people dying. That's not going to affect the stock market anymore. It has to be news that's brand new that people didn't expect. Okay, so bad news isn't going to do anything. It's just the market's just going to float upward, unless earnings next week is so horrible and the outlook is so negative that people are like, okay, there's more downside. I'm out of here. I'll wait till the end of the year to start buying back in. So we don't know. But again, the chart. Looking at the chart, let's go back. Here we go. The chart is looking relatively bullish, in my opinion. So again, we are hanging around at the 50% retracement. It will receive resistance here at 292, 293 zone. But I mean, you have a little bit of room to go long if you decide to go long. But I wouldn't touch it. Next week is an important week. Don't trade anything unless you are a gambler. So yeah, this is a area where this should start to roll back over. Okay, that's pretty much it for this week. I don't have any small plays that I'm looking at. A lot of the oil plays did pop back up because oil stabilized after that huge dump. So oil went negative $38 a share, so which crashed everything down, and then it kind of just floated right back up. This is a oil company, Occidental Oil. Let's look at the casino stocks. Flat, not doing anything. Alright, so here's the lows. See, this is a potential ABCD pattern. Okay, so if it breaks above 80, this thing's a buy. This is a buy. It could go to, geez, $103 a share, given positive news. Okay, if there's positive news, like they announce something like China, gamblers are back and they're spending, and people and the numbers are up, this thing will go back up. But again, this thing moves with the overall market because it is part of the S&P 500. So, but since it is hovering around over $70 a share, it is bullish, and you don't want to touch it. You don't want to short this yet, because if it hits 80, this thing is going to squeeze all the shorts who are shorting here. If it hits 80, it's going higher. It's going to squeeze people. So be careful with this one if you're shorting. But yeah, I'll watch this one. I might actually sell some puts on this one. Probably sell some $70 puts, and then wait for this thing to go to 100. Take profits then. So that's pretty much it for this week, you guys. Again, next week, just earnings season. It's very busy earnings seasons, and that will probably dictate what we're gonna do for the next quarter. Again, it is May. I mean, May's coming up, so sell in May, go away. That's the theme every single year when it comes to trading. You'll see a run up in April, sell off in May, and then you won't see the market go back up until about August, September, October. That's when traders start trading again. Um, but yeah, that's about it. All right, you guys, email me if you have any questions, and that's it.